In this video, we're going to talk about exporting accounting data to QuickBooks. This is part one of two parts. We're first going to look over the accounts that get exported, and in the second part we will look at doing the actual closeouts and imports into QuickBooks. We're going to concentrate on identifying which accounts get exported and then linking the control accounts to QuickBooks, specifically linking those accounts in Controls chart of accounts with the accounts in QuickBooks chart of accounts. And the first thing we'll look at is which accounts get exported. In Control, we're going to locate the chart of accounts under Setup, Accounting Setup, and over on the left is the chart of accounts here. Now, like most of the chart of accounts, we have our account groups: assets, liabilities, equity, income, and expense. And we're going to be exporting accounts from assets, liabilities, income, and expense. We will not be working with anything in equity in Control. The first group of accounts that we're going to look at and map are going to be the asset accounts, specifically undeposited funds, and the accounts receivables within Control. Under assets, we have undeposited funds, and these are going to include payments that you receive in the payment accounts of American Express, cash or checks, Discover, and MasterCard or Visa, and really any other payment method that you have set up in your system. Note that these groups may be exported separately or consolidated into a total lump sum that will get sent over to your QuickBooks as such. The other asset account that we'll be exporting into your QuickBooks is going to be the accounts receivables. And in the case of the accounts receivables, this is one of two export accounts that you will have to create in your QuickBooks. So the AR account must be created in QuickBooks as an other current asset, and we're going to name it OOB accounts receivable. Looking back in Control, we can see our asset account for undeposited funds here in the chart of accounts, and then the name of the account in QuickBooks that you have to match is going to go here. The external account name on each of these accounts equals the account name for the matching account in your QuickBooks. So undeposited funds goes into an account in QuickBooks called undeposited funds. Likewise, dropping down to accounts receivables, which is the only other asset account that we're going to be dealing with in exporting, is the accounts receivables that will be incurred within Sirius. The external account name of that account is OOB accounts receivables. Therefore, you have to create that account in your chart of accounts in QuickBooks as an other current asset, so that the accounts receivables have a place to dump into your QuickBooks. This handles setting up your asset accounts that get exported in QuickBooks. Looking in the chart of accounts in QuickBooks, in terms of the asset accounts that you are going to bring over from Sirius, your chart of accounts should look like this. You should have an OOB accounts receivable account as an other current asset, and your undeposited funds with these subcategories for Amex, cash checks, Discover, and MasterCard and Visa. The next account group that we're going to be dealing with are the liability accounts. In this group of accounts, we're going to be dealing with customer deposits, customer credits, our sales tax liabilities, including your state tax and any county tax liabilities that are set up. There's a note in the note in green states you may break out your taxes if you prefer, but generally unnecessary. Ideally, consolidate your tax liabilities into one account and export them into the newly created OOB sales tax account. So for customer deposits, you are going to create in your QuickBooks a liability account called Customer Deposits Taken. For customer credits, we'll do the same thing, and the name of that account will be customer credit balance. Your sales tax liabilities, that is all sales taxes coming out of control into your QuickBooks, will dump into an account called the OOB sales tax account. Okay, the liability accounts that we have identified are customer deposits, customer credits, and the sales tax liabilities. We can see in the external account name the corresponding account name that the account will export to, customer deposits into customer deposits taken, customer credits into customer credit balance, as we saw on the previous slide, and the sales tax liabilities is the other liability that we will be exporting out of control. That will be set up in QuickBooks as the OOB sales tax. Looking at the chart of accounts in QuickBooks for the liabilities exported out of Sirius, you should see it looking something like this. Customer credit balance, customer deposits taken, and the OOB sales tax all set up as other current liabilities. The next group of accounts we're going to look at are the income accounts. In QuickBooks, you will create a sales income account. The accounts to your left will be created and named as shown, however, as subcategories of the sales income account. If your QuickBooks already has an account called sales income, then just add the accounts on the left to the existing accounts as subaccounts. If you prefer, you may consolidate your accounts into one and have all income data export into the sales income account. This is a fine option, as sales reporting and tracking will be occurring in control. You probably have in your QuickBooks setup currently your income accounts of in one form or the other. Perhaps you have them set up under another income grouping like fee income or something similar. The suggestion for you to set up these accounts as you see them under the sales account category is because that is the way your control arrived to you with these accounts already set up. In time, if you want to change these income accounts and put them elsewhere or consolidate them however you see fit, you can certainly do that. But for ease of setting up your exports and your closeouts as quickly as possible, I recommend that you set up your income accounts exactly as you see them here. So we're going to set up the sales income category with all of these underneath it, and we're going to also set up another income account called other income that's going to include these four accounts: credit memos issues, finance charges assessed, order rounding, and shipping income. I do recommend that even though you may never use credit memos or you may never use finance charges to your knowledge, do set these accounts up just in case it ever occurs that you do use them or plan to implement finance charges. If these accounts do not exist, your imports will not work. So looking at the chart of accounts in Sirius, we see our income accounts, sales, all of the accounts underneath as we saw in the previous slide, and the other income accounts that we also covered. So if we look at any one of these in sales, we'll pick, for example, digital prints. We can see that the external account name is sales income, which designates that this is a subcategory of sales income, and the name of the account is digital prints. This is what we want to replicate in your QuickBooks. A note here that even though we see this external account name, and you will anytime that these accounts are under a subcategory, we will see the parent group here separated with a colon, and then after the colon comes the actual account name as it is to be set up in QuickBooks. In QuickBooks, your chart of accounts should match what you see on the screen to capture all of the income accounts that will be exported out of Sirius. The last group of accounts that we're concerned with are the expense accounts. In QuickBooks, you will create an expense account and name it Miscellaneous Sales Related Expenses. That account will contain the sub-accounts below. Write-offs, commissions, and credit given are the 3 expense accounts that will get exported out of Control. The corresponding QuickBooks accounts for these will be bad debt written off, commissions paid, and customer credits given. In Control, under sales expenses, we see the write-offs, commissions, credit givens. These are the credits given. These are the 3 sales expense accounts that we are concerned with exporting from Control into QuickBooks. So looking at your QuickBooks chart of accounts, for the expense accounts that we're concerned with coming in from Control into QuickBooks, your chart of accounts should look like what we see on the screen now. The last thing that you want to have to deal with after you are live your first or second day is to do your first daily closeout and your import not work properly. If because the chart of accounts in Control is already set up and you have received it with specific export account names, I recommend that you set up your QuickBooks chart of accounts exactly as has been shown here. If that is done, you should have no problem whatsoever doing your first imports. And that's going to conclude this video. I hope you found it helpful.